In our case, we were providing early stage equity to very, very young companies.
Are there any common red flags that would make you pass on a deal?
You need to be ready. So you need to have a data room ready, which is the documents around the business ready. You need to have a financial model ready. You need to have a proper pitch ready. And ideally, you need to run a process where you speak to a number of different investors around the same time to try and create a real process where you can get momentum into around. Let's say we're a fund, we're investing in 30 companies. So you will have some companies that do badly and you will have some companies that do well. But overall, our strategy is to have a blended return across the portfolio.
Which ones are you most proud of?
From an Elkstone hat, it's very much about trying to support Irish businesses to still stay in Ireland and build great business.
Barry, thanks a million for saying yes to coming on our Leaders podcast. It's great to see you. Thank you.
See you again.
I'd like to go back a little way, if that's all right, just to talk about kind of a little bit about your roots and where you're from, where you grew up. So start there for me if you don't mind.
Yeah, I'm from West Dublin, a place called Palmerstown. So was nestled between Ballyfermot and the countryside when I was growing up, but now Liffey Valley is now in the place of the countryside. So a lot of fishing, Gaelic football, playing bad music in bad bands when I was young, and and had a great time, great childhood. One of 5 kids, so busy house, and I have 4 kids now, so it's the same kind of busy house now. So.
Was that the inspiration for the banjo then back then? No.
Banjo, yeah, no, I was a bit of mandolin when I was going back. So yeah, kind of history of bad bands like Mechanical Death, The Shoe Detectives, lots of. We used to change our name regularly so people forget that they saw us and they might come again. That was the trick. But a lot of music when I was growing up, but not a very high quality. So a little bit of banjo now, but not much else. That's it.
And what happened that got you interested in pursuing education and picking law to study? Was it Trinity you went to?
Yeah, I went to Trinity. Yeah, I think I tried to be kind of an archaeologist at one stage, and then English. I wasn't particularly well organized when it came to that. I think, look, I liked history, I liked writing. It was one bus from Palmerstown into Trinity versus 2 buses to UCD. So, it wasn't a very deep kind of an analysis there around that, but certainly that love of writing was something that was always there, and I think from a legal perspective, that's certainly a keen interest, and the analysis and of problem solving, kind of which effectively law is also something that in the end I actually enjoyed as well. So that was the main reasons why.
And you headed to London quite early on in your career, would that?
Yeah, career at that stage I didn't have. So I left Trinity and dating myself, like when I left college, 20% of people in Trinity, 20% of people in Ireland emigrated. The year before it was probably 60%, and the year before that was 80%. So I left college a bit disorganized again, straight onto the building sites in London. So I did a year on building sites in London. Had a great time, but learned a lot of lessons, university of life type lessons about hard work. I mean, I was working on building sites with West Africans who had been trained by Russians as engineers, and we were still all just knocking down walls. So it was a kind of a real lesson in I guess work hard to try and get ahead. And I got a lucky break. I got a part-time job in a bank, an American bank, and then eventually spent 11 years there at Citibank, kind of in different locations across from Covent Garden to London Bridge to Canary Wharf. Yeah. Okay. And the law helped there because it was effectively a kind of a legal department there. And I had a chance to did some night school, so became a barrister in the UK and then an attorney in America, and then realized I didn't want to be a lawyer. So I was I've described myself as something of a recovering lawyer since then. So I did about 4 years in that area, and then switched into structured finance, which was more interesting for me because it was effectively a combination of the complexity of law with finance and meeting customers. And that was a better place to me. As I said, the bankers had more fun and seemed less intelligent. So that was a better place for me than the lawyers. And that's kind of why effectively I ended up there.
take us one step back for a second. You obviously had this work ethic though, because like that, working those types of jobs and doing those night calls, to study that must have been intense. Where did that stem from? What can you?
I don't know. I'm something of an addict when it comes to exams. There's a few other ones that came a bit later. I think, look, at the time I didn't really know, I wasn't on a traditional path. And in fact, I wasn't on a traditional legal path. And to me, getting the papers, becoming a lawyer, whether it's the barrister or the attorney, was just an important step in terms of giving me options. And then the irony is when I got to the options, I decided not to pursue law. But the fact I was English qualified and I was New York qualified meant that when I worked in, let's say, the structured finance world, there's a lot of documentation in that world. So it actually helped me have a bit of a unique selling point coming in, that I could handle docs. I could handle that part as a super junior. So we were working very long hours. And that was something that I was able to at least add value in. I'd forgotten all my maths. Famously, in an interview I did for that particular role, a very good friend of mine who's ambidextrous was writing numbers, two sets of numbers on a kind of a white screen, and trying to get me to calculate the discount cash flow, the present value of those future cash flows, using mathematical formulas. So I did an absolutely horrific job. He sent me a book called Brealey and Myers, The Principle of Corporate Finance. I read 12 chapters of that and re-interviewed and got the job. That was what happened. So he's one of my best friends still today. So that's nearly 25 years ago. So
and you were a good 10 years, were you, at Citi?
I was 10 years at Citi, between the legal side and the structured corporate finance side. And again, hugely international department. I think there were probably 50 in the department, 40 nationalities, about 3 or 4 Irish, literally every country in Europe. And most of my time was spent kind of working on investments in Germany, Italy, Brazil, kind of very global, effectively kind of roles.
They were a beast even back then. I mean, obviously still a beast now. Massive.
At one stage, Citi was 260,000 people. So I do describe myself as the Benjamin Button of finance, because I went from the biggest companies in the world, like Citibank, dealing with the biggest companies in the world, like Deutsche Bank or Kerry Group or Coca-Cola, to the smallest startups in the world, which we'll talk about a little later. So I definitely prefer dealing with real human beings at real companies versus the bigger numbers. So my career is all effectively been working backwards in terms of the size of the deals. But for me, the impact of the deals are much more at this earlier stage.
And then it was Rabo then, was it? Was
that Rabo then? I had a decision. I had to
come back to Ireland, was it?
Yeah. So by the time I was at Citibank, I was married with 3 kids. They were getting to kind of age 2, 3.
Is your wife Irish?
She's Manchester Irish.
Yeah,
so more Irish than the Irish themselves. All about that. So she was very happy to come back to Ireland, or come to Ireland. She spent a lot of time in Donegal, and so for me, it was London is a tough place to, it's a tough place to work. It's you work very hard with kids. It's hard, and there's a decision: either you stay in central London or you move out into the countryside. And I didn't really want a big commute, and so it was a chance to come back. And so came back. That was 2005. Got a lucky break again. Got an introduction to Rabobank, and then eventually ran a kind of a European financial innovation structured finance team for Rabobank for another about 10 or 11 years. So I haven't tended to jump around in terms of different jobs. So started as the head of structured finance, and then led a team of about 15 or 16 in Rabobank. And that was, again, law. Being half a lawyer helped in that as well. It was being able to kind of work in the innovation kind of sector was something that's kind of like a key kernel for why I got interested in technology later. So we were designing financial products for non-standard situations. It could be providing loans to farmers based off the price of milk. It could be lending to off receivables, supply chain finance, a lot of different kind of examples of different complicated transactions. So never really a flow business, one type of transaction all the time. It was really a lot of people like me in a team together that could go in, could meet a customer, listen to what the need was, go away, build a product or take different parts of products together, and then hopefully provide a solution. So that was, I guess, really where I began to get more interested in, I guess, the concept of innovation there.
With that learning then, when you talk about innovation and we look at maybe some of those ecosystems and the collaboration around that, because like that sounds a little bit risky, when you're kind of coming up with different products and different, but like what was the essence of that? Like how, like if you were to looking at different innovation systems and ecosystems, like how would they actually thrive like in that context?
Yeah, I think it's hard. Interestingly, I think it's much, the kind of non-standard solutions that we were doing became harder and harder in a regulated environment, and which is fine. And I think they became more and more difficult to build. And I guess I was towards the end of my time in Rabobank, which was a great place. I started to go to technology conferences and not banking conferences, and I kind of made a conscious decision to begin to tool up on tech. So this was in the late tens, mid tens, and I kind of made a decision at that point in time that you're either the old guy in the room who knows about tech or the old guy in the room who doesn't know about tech. And that was to me that was quite a binary. You can't half know. You need to go fully in. So I left Rabobank and a little bit kind of wandered a little bit. Frankly, I call it Brownian motion, the random movement of a particle. So I knew that I was interested in technology. I knew that.
Sorry, on that, was that just like a curiosity thing, or did you just see a trend, or did you just?
I'm not sure. So it was definitely curiosity. I wasn't a techie kind of person, but yeah, it was. I guess I saw that financial innovation in banking didn't actually use a lot of technology, and we had built some basic technology to manage transactions. I was aware of how much needed to be done in the tech universe, even in a banking context. And I guess I saw that as a trend that if you either lean into or don't. So I effectively started trying to consult into startups and learn about the ecosystem. I did an accelerator. I did a finance pre-accelerator in NDRC when it was based down in Guinness's. I started to meet different people. I started to kind of meet angel investors. I started to do some angel investing. I started to do some work for startups for free because I was still learning. And then eventually I figured out, well, maybe I can actually get something. I can get an invoice out of somebody finally to get paid for consulting, which is a good thing. And really loved working with early stage people building real innovation at that stage. Now that's a tough business. So at the same time, I kind of leaned back into what I used to know. So I've ended up having kind of a little bit of a dual career, which still exists to date. At that point, it was some consulting with early stage companies, some let's say a project on prop tech. I might be able to build a kind of financial model for that. Kind of helping an ag tech on looking at the manufacturing process. Quite varied types of work, usually with a bit of quantity, a bit of quant, bit of sense, a little bit of tech. And then I also became an investment manager for an Australian fund manager as well at the same time, which was very much leaning back into what I used to do. So my career is kind of, I describe it as a sawtooth, but it's a lot of kind of going up and then coming back a little bit. I prefer a sawtooth because that feels a little bit more organized. But yes, so for me, and this is another phrase I kind of use a bit, we ask when we deal with companies, we ask, do they have a North Star? I didn't quite have a North Star. For the Star Wars fans, I had a galaxy far, far away. And that galaxy far, far away was where technology and finance kind of came together. And that was the direction that I wanted to go to. And I didn't know what I'm where the end point was. I think I'm near part of that in terms of what I'm doing now. But it was that direction of travel and the combination. So I went back to school again. I did a top-up degree in digital technology, a kind of remote degree in digital technology. That was pre-COVID, so before things were remote. And that was really just to tool up so I could, when I could speak, I spoke to people I knew a little bit now, and I say a little bit. It was kind of what is UI, what is UX, what is, it's fairly basic stuff, but I actually quite enjoy that as well. And as kind of, so on the one track, I was kind of working back in as an investment manager. On the other side, I began to get more and more involved in angel investment and kind of helping people put syndicates together into technology companies and doing some investing myself. And again, that was a lot of learning on the job, a lot of mistakes made, seeing how people act, understanding how investment processes go, understanding what happens after a period of time. So in some ways, it was kind of like an MBA without paying for it, but investing instead, if you like. So that was how I learned to invest from an early stage perspective. And then came across Elkstone, had done a little bit of work with Elkstone. I was working on some fundraising for some early stage startups, and then had the opportunity.
For those that have never heard of Elkstone, who are they?
So Elkstone is a venture investment, real estate development and wealth management firm based up in Baggot Street, Galway, Cork and Belfast. So it's a very kind of a wide firm in terms of what we do. So on the one hand, we're building student accommodation in Belfast. On the other hand, we're advising high net worth. And then I'm as part of the venture team. So I'm a venture partner within the venture team. And we have been investing for probably about, I guess, over 10 years. I'm there about 3 years. And we have a portfolio of 60 companies, mostly in Ireland, but a little bit outside of Ireland. And we invest two forms of capital. We invest capital from what we call our investment club or an investment platform, which is high net worths who invest in individual transactions. And we have a fund, 100 million pre-Series A fund. So it's, I think, the largest early stage technology fund, a generalist fund. So we invest between 1 and 2 million typically in very early stage companies from pre-seed to seed to pre-A. And they're in technology-enabled, capital-efficient companies, and from everything from digital health, software as a service, fintech, a little bit of medical device, and cyber. So it's effectively a generous slice across the island of Ireland in terms of the Republic of Ireland, of great early stage technology.
Is there any like it makes sense, but like from a if you were to look at some of the pros and cons of kind of being quite spread across lots of different sectors,
yeah,
and obviously other firms would have maybe more of a niche or on target their expertise and bring in a pan of experts in a certain kind of niche. Is there any kind of, is that just because you feel that's appropriate for the market and the kind of types of checks is right, is there any pros and cons of that approach?
Yeah, so the stats would indicate that there's that both can succeed in terms of the specialist and the generalist. So we're really involved in finding the best of Irish early stage companies across all of them. And you talk about a panel of experts. So we've got almost 40 experts that we plug into how we evaluate deals, how we evaluate investments, and also how we support our companies as well. So in some niches, we need you need some specialists, very specialist technical support, and in other areas you need a little less, and we have that. So I think from an investment perspective, being able to invest in a fund that has 30 different investments across a lot of different sectors gives you the diversification, which is also very helpful from an investment perspective. Yeah.
And like your investment, I guess, philosophy, has it evolved? Has it changed over time? Because obviously you've done a lot of angel, you've seen how the big corps, you've had international experience. Like has your philosophy changed at all, or is there any kind of tips or pointers or guidance that you could share with our audience?
Yeah, I'm not sure. I guess it's evolved over time as the position where I'm investing at. So on the one hand, if you're lending to a large company, you're looking at a particular set of factors. If you're lending to a small company, you're looking at another set of factors. In our case, we're providing early stage equity to very, very young companies. And in that case, we don't control the business. We might have 20% of a business. And what we're looking for there is kind of almost universal and remains the same. And it's a great team. The majority of our decision is around who we're investing in. So that's a huge amount of work that we would put into the people, and that's everything from soft skills like integrity to how people behave, professionalism, to hard skills like skill sets, and then also to looking at how a combination of founders will interact together, what their story is, why they're working together, how they'll handle adversity, because it's really very difficult. This is very, very hard starting an early stage company. So the people side is a huge part of our evaluation. And then what we're looking for are companies with our teams with big ambition, technically, with a technical solution that can scale very, very quickly and scale quickly out of Ireland. So that international ambition, looking to sell, and a particular type of pattern that really generally is only possible with technology enabled companies, whereby you can get some really serious traction in terms of either building a product, to be able to, from a venture perspective, attract even bigger capital to go faster again. And I think, for us, we look for founders who are really students of their business, that understand venture and our expectations of being able to build in a quick way with velocity, and to be able to balance all of the factors and how you build a business to give the business maximum velocity to be able to get the next round. So it's which I think is relatively universal in terms of what others, I don't think there's necessarily a secret sauce in that, but I think from an investor to investor, we do want something unique, a unique selling point, or a unique insight in what the company is doing. So it's not just doing what everyone else is doing. Ideally, it's having a really unique insight on a problem, often a problem that has been felt by the founders themselves. They come from a domain, like a particular domain, and understand that problem, and that can be a very helpful fact pattern as well.
That emotional involvement, nearly, or they felt the pain of it.
They can felt the pain, yeah, and I think pain is a very interesting word there, because I guess in many cases we're looking for people who are painkillers, not providing. It's what their solution is, a painkiller, not a vitamin. And a vitamin is something that it's a nice to have, or something that people might take. But if you're really solving a real pain, then you have a potential opportunity. And I think that's where, this problem solution issue is a huge part of, again, our evaluation. That is this really a problem that really matters? And is this a market opportunity that is a big market opportunity, or can be a big market opportunity over time? So that's that idea of a large addressable market there at the end. So if you kind of add all of those factors together into a mix, into our investment papers, which are very detailed, and then we go into the investment committee, and that's the discussion that we have about balancing all of that, because in many cases, not everything, companies mightn't quite have everything ready.
It's a bit of a trade-off.
Oh yeah, and when we're investing at early stage, of course, there's trade-offs in terms of what is being built or what.
Are there any common red flags that would make you pass on a deal, or anything? Just, again, we like to obviously add an element of sort of coaching and learning development with the pod, with aspiring entrepreneurs or people with ideas. Like, it'd be great for you to share one or two things.
I think particularly if people are fundraising, I guess I was in the Scouts, it was be prepared. I think you can't half fundraise. So it's important that if you're looking to raise funding for your company, you need to be ready. So you need to have a data room ready, which is the documents around the business ready. You need to have a financial model ready. You need to have a proper pitch ready. And ideally, you need to run a process where you speak to a number of different investors around the same time to try and create a real process where you can get momentum into around. It's not always possible to do that, but that's ideally how you create momentum to get around. But it is be ready, be professional, be timely, be on time, some basic stuff there, because all of those indicators are, is this a professional that we really want to deal with? And then, yeah, look, there's, yeah, I think that's the key part. And then, as I said, be a student of your business, understand how this business can scale, understand the challenges that you might have, and recognize those and bring them to the table, because we'll see what those problems can be, but by being able to come in intelligently to say that these are the challenges, I think is very helpful there.
Okay, not trying to fudge or hide them. It's more
Fudging,
kind of
hiding, lying, that's all bad business. Yeah, that's, being an arsehole's not great either, but that's, it's, I think, like we're looking to form a partnership with this team. Like we speak to our founding companies every week, every 2 weeks at max. That's a lot of, like, and that could be for 10 years. That's a lot of contact. We sit on boards, either as a board director or as a board observer. Again, that's every 2 months. There's a lot of interaction, and we try and be respectful, because it's tough. It's a very, very tough business. And the reality is a significant number of these companies will fail over time, and we're trying to handle that as well as we can, and appreciate that the founder journey is a difficult one. We're working hard as a firm in Elkstone to try and put an infrastructure around how we help companies on these different expert panels, but also that we've kind of carved out the founder journey, part of that story, or not that story, but part of that experience, to try and see, well, how can we help with that, and not just look at a company as an investment, but look at a company as a group of people that we're working with and we're trying to help through
less
what we
binary,
know.
more compassionate, perhaps, or
Yeah,
supportive.
now look, that we're effectively just recognizing that it's not all about the business, but but I think we have to really work hard around what would how we make that, how we make that work. We don't want to be wasting the time of founders on different projects. We want to really be impactful on how we help in a positive way.
You are there to do a job, though, and I'm always curious about that balance, because, like, ultimately, you are investing, a big chunk of other people's money, like high net worth individuals, perception of that, some tricky characters, I'd imagine, right? Yeah. Some demand it. So there's certain expectations, and there's certain, there's timelines on that, right? So, like, how do you cope, or how do you manage, setting expectations, or just the reality of changes in the market, headwinds, like the usual stuff, right? When you're just managing those cycles, and there's obviously the foreseen and then the unforeseen. Like, is there any kind of, I suppose my question is, like, what are the ways that you manage when people are ringing you, or people are, or that they're disappointed with something, or I'm always curious about the people that are funding some of these funds, with their own money, and that balancing act between managing their expectations versus you're there to get a return on these investments, right? These funds.
So look, if we're, let's say we're a fund, we're investing in 30 companies. So you will have some companies that do badly, and you will have some companies that do well. But overall, our strategy is to have a blended return across the portfolio. So hopefully those discussions can't happen at day, month 1, month 2, month 3, month 4. It's a long-term cycle. So when we're investing in a fund, it's a 5, 7, 10-year horizon in terms of the returns there. So I would hope there's not as many difficult discussions there. If you're investing in early stage companies on a case-by-case basis, it's very risky. It is. So I think we would be...
Did you learn that, though, right? When you started doing angel, like, I've done a little bit of it, but you do kind of... I found myself just a lot more emotionally involved, because when you're not making as many, you're not spreading it as much, right? You're not diversifying as much. Like, is that something you've just had to learn the hard way, or learn over
you
time?
have to stay. So, I think one of the biggest mistake angel investors make, and an angel investor is just somebody that invests in an early stage company, right? It's a funny word. It means, because you're not an angel, you're trying to get a return. But that can be anything from €5,000. It could be €1,000 to €5,000 to 25,000 to some people who put 250,000 to a million into companies. I think the biggest mistake angel investors make is not understanding that it's a long game.
Long meaning 10
Well,
years.
not only is it a long game, that you shouldn't take all of your capital and invest. So the advantage of a fund is that you're not only investing in 30 companies, but you're investing usually over 3 or 4 years. So they're within the cycles that happen yearly cycles. That's a way of blending that out. If you're an angel investor, you should take whatever capital you're going to deploy, whatever capital you're looking to invest. You should probably divide it by 4 years, then divide it by 5 per year, and say I'm going to do 20 investments. And then realize that just because you've invested once doesn't mean you won't be asked for follow-on capital after. We as a fund, we have 40% of our fund is used for follow-on investments. So that's what, after we make the first investment, we have more capital. And that's another thing that angel investors don't appreciate, that you may need to put more money into the company. And that's an even harder decision to make. And it's also starts to get a bit frustrating because you think, well, I thought I was done here. And sometimes you have to invest to defend your position. There might, there's certain terms where in certain cases, there's a pay to play term where if you don't invest, you might lose the rights that you used to have before. It gets complicated. So don't do this on a whim. Don't be strategic, be thoughtful about how you invest on a single basis, and really just don't do single big investments. Pace yourself, learn as you go along, work with other people who've done it, work with great people. There's different syndicates around town like HBAN or other syndicates there, and that's a place where you can go where you can learn as well in terms of understanding the complexity of this investing. And as I say, I'm half a lawyer from a previous world, and it's complicated. They're complicated. Terms can be complicated, and the scenario outcomes here can be complicated as well.
And what's the most common, again, is mixed competence maybe of the investment world, like from some of our audience perhaps, right? So included, right? So like, what are the examples of exits? Apart from some of the obvious ones, if you're investing in, if you say, I don't know, you have a couple of $100,000 or, and you're following that strategy, like what should someone expect to get money off the table if there's an acquisition? Should someone get money off the table if private equity come in or another investment? Or
there's different
IPO.
Look, IPOs are not happening as much as they used to right now. But there's different cases where there might be a merger, it might be an acquisition, it could be a secondary where sometimes a new investor comes in and will actually buy the shares of the existing investors, particularly the angel investors, just to kind of cleaning up the cap table to make it. In some ways to reward the early stage investors to make decision making a little bit easier as well. So there's lots of different scenarios there where that can happen, but there's still a lot of risk in all of those processes around the execution of what is happening there. And the reality is that the majority of angel investments will not make money. And what you're trying to do is to find the companies that can give you a very good return. And by good return for a fund, it could be a 10 or 20 or 30x return for us to be eligible to come into a fund, that we can really see a real path to an outsized outcome for the fund. And that means certain types of businesses just are not appropriate for venture. And going back to what I said earlier around, the questions founders need to ask. A founder really needs to look again at their business and understand, is it an appropriate business for venture capital? If we walk outside of here today and we look around, there's very few venture businesses that we see normally on the street. Most companies don't attract venture capital, yet they're extremely successful. So you can be successful without venture capital. You can be successful without angel capital. It's just understanding that there's different pools of capital or funding that you can access depending on your business model. So not getting a VC round doesn't make you a bad business, and actually getting a VC round doesn't make you a good business. It makes you a business that has a particular set of characteristics.
Which ones are you most proud of? Like if you look at some of the investments that you know, as an individual, whether you're part of Elkstone or, you know, been instrumental, let's say, you know, don't be humble or unassuming here, but which ones like
yeah, well, it would be rude to name names because they're all they're all our babies, all of our children, but and not children, they're kind of adults now. But yeah, look, I think I prefer to answer that in a different way. So there's been plenty of cases where we've been able to get a very significant return. Within Elkstone, we have a number of, let's say, unicorns in the portfolio as well.
You're not naming any,
huge. Well, we can name those, but they're common knowledge. Like let's get checked. There's an unbelievable company, that is, transforming how people are, interacting with medicines in the States. Flip Dish is another company that is kind of doing amazing stuff. In an Irish context, Mana Drone Delivery is a very interesting company. That, if you're out in Blanchardstown, I think you're getting coffee delivered, and maybe TBD, some new sites to come. Protex is another great company that effectively provide using AI to AI visual techniques to kind of keep workplaces safe. They've just done a kind of a Series B of, I think, $38 million. So huge, kind of huge investments. And I think the common factor in a lot of those companies is that they are companies that have grown out of Ireland, where the workforce is still here, the headquarters are still here largely. And I guess from an Elkstone hat, it's very much about trying to support Irish businesses to still stay in Ireland and build great businesses. And if you look at what's happening, I guess if we date this to, March 2025, the threats against Ireland in terms of, from tariffs, the threat against our technology, the US technology infrastructure, the US pharmaceutical infrastructure, as a country, we need to be supporting Indigenous industry more than ever. And that's where there's a lot of work that still can be done to make that happen. And that's what, what I get satisfaction out. It's nice to get clearly return of money or returns on money, but it's really amazing to see when we invest in 2 or 3 people and they're 20 people in 2 years' time, and they're going on to build a bigger business. And it reaches a stage where those businesses will build, and we would have been sitting alongside the founders at the beginning, and there's a point in time where they go, you're off the bus, right? And other people will drive the bus and bring the business forward. And that's a source of actually a little bit of sadness in that you'd still be in touch with the company, but it's a real sign of that this is a successful journey for those companies as well.
Yeah, it's a sense of pride, obviously, as well.
And it's the biggest thing, the biggest difference between the start of my career, as I said, when it was doing kind of large funds to large companies versus now, is it's really impactful, real people. That's hard as well, because you see the founders, the stories that the founders have. Whenever I speak to a group of founders, I say, you'll sack your friends and you'll be sick. Yeah, that's what will happen, because it's not going to be this linear experience. You'll become friends with a group of people, and sometimes you'll run out of money and you'll have to make some really, really difficult decisions. So I don't think there's anything harder than being a founder entrepreneur in terms of, from a career perspective, that I've ever seen. And I think, from a societal perspective, I think we could do a lot more to encourage that as well in terms of.
So let's go there for it. Let's from a stop-start continue perspective, putting our green underpants on for a moment then, right? So in relation to encouraging more Indigenous businesses, creating the right ecosystem framework, all of that stuff. Give me some, what should we stop doing as a country specifically? Is there anything that, you think that is getting in the way, whether it's bureaucracy, red tape, noise, media, whatever, is holding us back? Is there one or two things that you could call out that as a country we should try and really stop doing?
No, I think actually that from an existing infrastructure perspective in terms of certainly supports from Enterprise Ireland and other support, that actually is in solid position. I guess what we should
continue doing that.
Yeah, but what we should stop doing is making it very, very difficult for Irish companies to use existing tax reliefs, whether that's kind of R&D tax credits or enterprise, from a tax relief perspective, that can be streamlined and made a lot simpler, and that they should be expanded so that founders can be incentivized from a capital gains and other perspective to actually start these businesses, because these businesses are building real jobs, and the future of this country is going to be based off Indigenous industry, and the drive, and it's an urgent drive, should be towards making that as easy as possible. So if there is red tape, remove that. I don't think that's necessarily the problem, more generally, but certainly around some of the use of tax reliefs, we could be better at making that easier to access and widening those as well, so that we can be competitive on a world stage.
This has come up with some of the Scale Isle events, and they've been chatting about this a bit. It's just,
regrettably, it's the same stuff.
So, like,
there's
getting a bit impatient with it a little bit, because it does seem to be that we're saying this, and we're, to be fair to Martina and
yes.
Brian, they're bringing in the ministers, they're bringing in, obviously with an election, a change of government, but we've been chatting about this for a while now and making it.
And there have been some
simpler
developments and tweaks. To be fair, Martina and Brian are doing a really hard job in that context. And we support them in anything they do there. But I think the government can certainly do more, I think, to support that. And hopefully will do more, because I think the ecosystem really, really needs that. Again, there was some uncertainty around NDRC and things like that, but that looks like hopefully that's going to resolve out. Yeah, and I think we are we're a great little country, but we can be doing better and not be complacent in terms of what we're doing. So hopefully, I think, as I say, there's some big opportunities here. We're really hitting above our weight in a lot of factors as well. We have some really incredible companies here, and it's just keeping laser focused on supporting them as they grow.
Yeah. And is there anything else we should start doing that we're not doing yet? You've been all over the world, you've seen other countries, you've seen the way they kind of operate, the way they kind of support their startups and tech scale-up businesses. Is there anything else? You've touched on some there, but is there anything else that you feel, if people are listening, that they could do? Or
no, I do think the tax system needs tweaking significantly and can make a really effective difference there in terms of either simplification and expansion of kind of opportunities there. There's also some stuff around share option plans where there's an additional complexity there that
between the KEEP schemes and
which again seems to be around kind of stopping abuse of these particular schemes, when actually the take up on these schemes is almost is very, very small. So I think there's a mindset aspect there, but I'd be hopeful that we can see some progress there, but it's a very competitive landscape. If you look at what has happened in France, for example, where they've moved they've moved very, very quickly. They have a very large kind of incubator, Station F. They've shifted some of the tax reliefs there in particular, and France has really come on quite significantly in quite a short period of time. And I guess for us, we're still obviously close to Britain, and we'll always have that access there. But I think connecting more into Europe is an opportunity. But the biggest opportunity for us is really, for our companies, is often selling in the US as well. So we have to just keep a real close eye on what is going to happen in terms of tariffs, etc. In what's happening at the moment with the US. But let's wait and see there.
I'm going to go back to the other stuff that's important. The banjo, right?
Yeah.
What kind of music are you playing on the banjo? How often are you playing the banjo? When are we going to see you posting LinkedIn videos of you playing the banjo? You've got such many strings to your banjo.
Strings. Yeah. So the banjo. So I guess it's kind of my meditation in many ways.
Yeah.
So I play an odd time, but it's my target audience would be drunk people late at night at a wedding. Then they don't know how bad I play. So that's when I come out of my pod, and usually playing with somebody else, because I'm not a great. I can't really. I don't really remember chord sequences or so I as long as I'm playing with somebody, I can play.
Okay.
So I
And it's
can't.
trad music, is it? It's like
It's a bit of
reels
trad,
and
bit of
jigs
Christy
and
Moore, bit of country, bit of everything. Yeah.
jeez,
So
yeah.
you never know. So no, I love it. And as I say to people, if I come into my house uh, for after day work, sometimes I take a left turn. I go in, I play the banjo for 5 minutes or the guitar for 5 minutes, and then I go in to see my family. It's kind of like
Oh,
it's the
the
decompression
ritual, kind of the therapy
it's a
behind it.
decompression chamber in many ways, which is very you know, for me it's the kind of a source of meditation. You kind of go and the hard drive
Yeah.
kind of shuts down, and then I can be a human being again.
And you obviously still have like so much hunger, ambition in the tank, especially variety. Like you're involved in so many different boards. You observe different boards. You invest in different like. Is it just that curiosity and that variety? Like, because there's such a common thread in your
Is there?
life.
I did not.
There is. There
Yeah,
is.
I
You
did
know,
not, I did
I'm
not.
analyzing you a wee bit while we're chatting as well. You know, like it's.
Yeah. So my career, and you know, I chat to kind of people. Obviously, you know, you meet a lot of people on different journeys, and I say, so I've kind of tried to balance learning and earning, and they're the two things, and often they compete. So, in sometimes when I describe my zigzag, when I'm on the bottom, I'm starting again. Your earning capacity can be hit in those, because you know, a logical thing to do is to work in a bank and stay forever, or to shift in different banks in the same kind of role, and that's how you maximize your earnings. That for me was never necessarily appealed to me, but it was kind of more trying to learn something new and be good at it, and then go to something which was an adjacent possible, but not necessarily in a linear line. Now, funny enough, where I am now, you know, so I'm also a non-executive director on independent non-exec on boards of U.S. companies in Ireland. So I'm still split in a little bit. So between two, so the ventures on the one side and this other side, which is very much what I used to do in terms of the structured finance world, is another kind of part that still sits there, but which I get a different satisfaction out of. But from the venture perspective, I think you can have real longevity in something like this, because you're dealing with people. People are always interesting, frustrating sometimes, but interesting, and dealing in technology. And if you look at what's happening with AI right now, it's incredible. And I think there's a whole opportunity to relearn a whole new set of problems as well. And I think that's never going to stop. So for me, curiosity is a word I use and I love as well. So it's hard to beat what I do now in terms of really being happy, working with great people within Elkstone, working with great people out there, and younger people usually, but not always, building really impactful pieces of technology. So it's hard for it to get much better than that. So maybe I'll stay in this stream a little bit longer, I suspect.
Final question, just about boards that you touched on there,
Yeah.
because you know sometimes people are younger or even older people, they might not have had the opportunity to go on a board. But what have you seen, like, or any advice or tips when, say, founders they're creating a board, they're forming a board? Like you've obviously seen bigger, you know, more established businesses, mature businesses, and you've seen the dynamic and the governance and the way to structure a board, maybe versus some, you know, that nobody's done it before kind of thing. Is there any kind of like a couple of tips or a couple of pieces of advice that you give kind of
So
founders?
firstly, a red flag for us is when people are when a founder is resistant to the formation of a board.
Okay.
And so that's a red flag, because we don't really understand, and in some ways it's a misunderstanding possibly of what a board is meant to be. But a board is obviously a corporate oversight of the business, but our interactions with the company isn't always at the board. We're speaking to founders every week or every 2 weeks, and at the board it's a chance to take a snapshot of the business and to pull everyone out of the day-to-day. And it's the opportunity to look at the real strategic and operational challenges that business is actually facing. And one of the biggest problems for founders, which we see all the time, is they're so in the weeds of trying to get something done, trying to get the next sale done, that they forget to look forward. And a really great board should be looking 3 months ahead, 6 months ahead, 1 year ahead, 3 years ahead, 5 years ahead, in terms of where the business is potentially going and what's happening in the external environment. It shouldn't be running through all of the pipeline. It shouldn't be a place of conflict. It should be where a founder comes in, is open about challenges, seeks help, and gets help. And then we go away, and our job is, as an investor in that case, is to try and help where we can and to stay out of the way. So, but that needs discipline. It needs proper papers, proper preparation, proper discussion at the board. Sometimes you need a chair. A chair can be a good person to bring in to make sure the agenda is followed clearly, in terms of we don't spend too much time on pipeline in particular. A lot of people go overweight on pipeline because at the early stage of the company, it's really about trying to get those extra customers. But that's business as usual. It shouldn't be at the strategic matter of the board. And the reality is, the investor's probably not going to be able to help other than saying, what's the probability of that deal closing? It's not, so I think taking the discussion, pulling it out, not being afraid of a board, embracing it, getting great advisors in, whether they're on the board or around the business. Again, we try and help quite a bit, but that is also something that can be very impactful.
Barry, thanks a million for coming on and sharing a fascinating story full of lots of knowledge, wisdom, but you're a gent, and I really appreciate you saying yes to coming on the pod.
Oh, thank you. Thanks a million.